Okay, so here's the deal. The CFPB just announced a proposal that would ban foreclosures until 2022. So let's see how this may impact the housing market in 2021. Does this, all these people are talking about a housing crisis, a housing crash in 2021. Well, let's dive deep into what the CFPB is proposing and see how this impacts things. So on the CFPB's website, they mentioned that this potential or this proposal, if accepted, would do three things. Number one, they said it would give borrowers time. They said that every one of the nearly 3 million borrowers behind on their mortgage should have the chance to explore ways to resume making payments and avoid foreclosure. To make sure borrowers aren't rushed into foreclosure when a potentially unprecedented number of borrowers exit forbearance at around the same time this fall. The proposed rule would provide a special pre-foreclosure review period that would generally prohibit servicers from starting the foreclosure process until after December 31st, 2021. The CFPB is seeking public input on that date, as well as whether there are more limited ways to achieve the same purpose. So the CFPB is proposing to say, hey, based on everything that's happening, based on unemployment, we are going to, and based on I think there's over 3 million people now that are late or behind on their mortgage payments. They're saying we're going to postpone any potential foreclosures with these homeowners until after December 31st, 2021, pushing a potential foreclosure crisis or foreclosure, a bunch of homes foreclosing until 2022. So here's what they said. They said that nearly 1.7 million borrowers will exit the forbearance programs in September and in the following months. So you've got over 3 million people that are behind on their mortgage. They've taken advantage of some type of forbearance or some type of stimulus program to help them in the event they cannot make their mortgage payment. Well, the second thing the CFPB thinks that this proposal will do is give servicers more options, give mortgage servicers more options. So here's what they said. The proposed rule would permit servicers, mortgage lenders, to offer certain streamlined loan modification options to borrowers with COVID-19 related hardships based on the evaluation of an incomplete application. Normally, the certain exceptions, Regulation X, requires servicers to review a borrower for all available options at once, which can mean borrowers have to submit more documentation before a servicer can make a decision like that. Allowing this flexibility could allow servicers to get borrowers into an affordable mortgage payment faster with less paperwork, both from the servicer and the borrower. This provision would only be available for modifications that do not increase, now listen closely, that do not increase the borrower's monthly payment and that extend the loan's term by no more than, 40 years from the effective date. So not only is the CFPB proposing that they want to ban foreclosures or any potential foreclosures until 2022, they want to start offering 40-year mortgages, which essentially is going to amortize your typical 30-year mortgage out another 10 years, which then in return lowers your monthly mortgage payment. Well, and I don't think it's a bad option to help people that are in trouble to make their monthly payments a little bit more affordable. Now, furthermore, the third thing they said was that this proposal would keep borrowers informed of their options. The CFPB also proposes a temporary changes to certain required servicer communications to make sure that during this crisis, borrowers receive key information about all of their options, because a lot of times homeowners that are in a situation where they can't make their mortgage payment, they don't know all of their options. So the question is, how does this affect the 2021 housing market? How does this affect a potential 2021 housing market crash? Well, Forbes came out and said a couple interesting things. I want to share this with you. So Lori Goodman, the vice president for housing finance policy at the Urban Institute, is also, there's a lot of people, a lot of economists that are not in favor of this proposal from the CFPB. So Lori Goodman said she's also not in favor halting foreclosures until early next year. Goodman says the moratoriums already in place are effective, but believes it's unlikely that additional measures will be needed through the end of the year. So Goodman believes that, by the time we get to the end of the year, people will be back to work. People will be able to start making their mortgage payments on more of a regular basis, because a lot of those forbearance plans are coming up in the fall, right? September, October timeframe is when a lot of those forbearance plans are set to expire. So she said, at the rate we're going, the economy is going to heal well before the end of the year. This is what Goodman said. She adds that borrowers who have already gone through the loss mitigation process, where they're reviewing all their options, are still determined that foreclosures would be the best option for them. She would have that option to sell their home on their terms and downsize, because listen to what she says. She says, Goodman is sympathetic that some Americans will end up losing their homeowner status, but acknowledges that there is the reality of the unprecedented situation. So, furthermore, she adds that it's unlikely that we will see a large wave of people forced out of their homes as seen during the Great Recession in 2008. She said very few borrowers are going to end up being evicted. Most borrowers have a lot of equity in their home and will be able to downside. This is very different from 2008. So this is what I've been talking about the entire time as I continue to make these Housing Market 2021 videos, is the situation that we're all in today is very different than that of 2008. You have the government and the Treasury, and you have all these stimulus programs that are helping people that can't make their mortgage payment. Okay, now the question is, okay, well, what happens to the banks that aren't getting their money? Well, they're getting funded from the government, just like all the PPP and all the different stimulus packages is coming from the government. So the banks financially, they're not losing money like they were in 2008 when people weren't making their mortgage payments. They're actually losing that money. That's not the case here. The other thing that Lori Goodman also mentioned, that I totally agree with her, is people in their equity positions now are in a much better situation than they were in 2008, 9, and 10, when property values were worth a lot less than people actually owed on their home. So instead of walking away, I don't have the exact percentages in front of me right now, but there's a large portion of homeowners in the US that have great equity positions, 40, 50, 60% equity in their home. So they'll be able to sell that property, use the money, downsize, or potentially pull some equity out of the property to help them to continue making their payments. But there's a lot of economists that believe that by the end of this year, with herd immunity, with all the vaccines, over 50% of the US has been vaccinated. Whether you believe in that or not, that's a different topic. The fact of the matter is, by the end of the year, many economists believe, and I also believe, that unemployment rates will start to go down, more people will start going back to work, and you'll start to see us normalize. And further, this is just further evidence that, I don't believe that the housing market in 2021 is headed towards another crash. What do you guys think? Make sure you guys let me know in the comments section. Make sure you subscribe to this channel, because I'm doing updates on the housing market couple times per month. And so I also made another video right here. You guys can go and watch this right now, where I give you my entire housing market predictions for 2021.